Welcome to the Challengers. This is episode 10. I'm your host, Zach Miller from Tearsheet. And with me is Josh Liggett from Our Crowd. Say hi, Josh.
What's up, Zach?
Number 10. I feel like it's an achievement.
It's an achievement. The only thing I could wish more was if I was born in Canada and all my credit card debt was forgiven.
And of course, Josh is alluding to some news this week. Yeah.
But yeah, we could get there. But I mean, just let's bask in the fact that we're in double digits. I think that's a pretty, that's a pretty nice vanity metric, for numbers. And I would love, really happy that we got to hit number 10, and especially loving, the responses that we're getting from people. Really, really grateful to everyone out listening there, and for you for tolerating my madness.
Which There's definitely some survival bias at work here, right?
For sure.
But yes, episode 10, and we're smack dab in the middle of summer. We do have a lot of news to cover. We'll move quickly through some of the stories today. Before we continue with our program, I'd like to thank our sponsor, MX, for supporting Tearsheet's work. MX is the leading data platform for banks, credit unions, and fintechs, enabling its clients and partners to easily collect, enhance, analyze, present, and act on financial data. I think first up, we wanted to talk about Judo, which is a challenger bank down under. Did a big equity raise this week, raised $400 million. It's like all of a sudden over the past 2 years, Australia came on the map, not just in terms of fintech, but in terms of challenger banking. We have a few different competitors down there, and obviously $400 million is bigger than 10. It's a big number.
Yeah, it's a big number, and it's interesting because it's Australia. Like being in America or Europe, that's all the focus gets there. N26, doing what they're doing, and even some of the B2B challengers, which we've spoken about before, which what Judo is doing. That's something that gets a lot of attention. So it's really cool to see Australian businesses getting service of a challenger bank as well.
Yeah, and it seems like it's growing relatively quickly. I think they launched earlier last year. It looks like they're on pace to lend. Again, as you mentioned, Josh, it's a commercial bank. It works with businesses. It's on pace to lend about $1 billion, I think, by the end of this year. A couple other nuances that we were talking about in sort of the warm up to the show was, this company isn't founded by 20 somethings who just decided that they wanted to disrupt banking. These are in the article.
They're in their 50s.
Yeah, they're in their 50s, and they were quoted saying, "We're not spring chicken." So I thought that would be the theme of Judo, the not spring chicken company. So they are in their 50s, and they're previously were executives at NAB, which is one of the top 3 banks in Australia. This is different. So these are industry guys that said, "Hey, we see this trend happening around the world. We think Australia is ripe for it. We'll start something." And looks like it's working.
Yeah, it's really interesting. I think the interesting thing about it is that the way that they're going about it. And if you go on their website, and if because I don't live in Australia, nor do I have a business in Australia, I've not been able to use the product. But at least looking at the website, yeah, very disappointing. I know I should do that. And see if I get a loan, which would be very interesting. We should do a case study, Zach, where we just try to get loans.
Just get loans from every bank in the world.
From all these like fintech banking, SMBs, and see how good their data is.
Right.
Like a I don't know, like a To Catch a Predator sort of situation.
I could see a whole series on that. That'll be episode 11.
Exactly, because it's a very relevant. It's a hot topic that everyone really wants to hear about. But in all seriousness, what they claim to be doing is providing a tremendous amount of service. Which is interesting because if you look at the way that challenger
banks,
that's
a ding on most of the challengers, right? The lack of service.
Yeah, exactly. Most challenger banks are just like, here's a bank self-serve like buffet, pick a salad, like someone's
Hopefully you don't choke.
Yeah, you have someone behind the counter just staring at you, making sure you don't screw up. That's sort of like the way that like keep moving, yeah. Buffet style versus this is like, it seems to have, what they claim at least is that this is a lot of, it's relationship based business, which I know that a lot of, traditional businessmen have been, and something they valued a lot. I think that sort of has to do with the fact that these are, baby boomer founders, to be honest. And it's something that's really interesting. And I'd love to see metrics in terms of the age of their users. And if they're small businesses, like early, late, people value different things, which would be really interesting to see. But I think it's a really cool approach to getting to lending. It's also, if you look at like the Cabbages, the Fun Boxes, and the Blue Vines, like, again, these are all companies that it's a machine, and they're claiming to provide a little bit more of a service, like, a hand holding service. And the other interesting is that I would assume that they call themselves a challenger bank, but really they're doing a lot of small business lending. So they are offering additional services, on top of just the lending and all that. But will Funbox, will Bluevine, will Cabbage, and these companies, all these other large, fintech that do B2B, will they also perhaps go in that route where to get a full banking license? I'm not really sure, but it's just an interesting factoid as a part of it as well.
Interesting. I think we should make a mental note to come back to Judo at a later episode to maybe dig into some of those metrics that you thought would be interesting there. On the other end of the spectrum, we have Joust, which is a company we've spoken about a couple times on the show. Also raised some money. They didn't raise $400 million. They raised a little bit over 2.5. Joust, again, is, as if you're not familiar, we spoke about on the show previously, but it's a business bank for solopreneurs. So sort of somebody who needs some payments and needs a bank account, a debit card to be able to spend off of. Joust is like sort of focused on that niche of providing services into the sort of the one person band, the one person show who's a business person with unique needs. So I think that's also an ongoing theme, Josh, right? Like this idea of these niche banking providers. Like I don't know how big some of these guys will get, but we're definitely seeing sort of like really niche focused banking products and banking services.
Yeah, I think that's in line with what we've been speaking about the last couple episodes, about which I don't want to even beat a dead horse so much. We've spoken about, these niche players coming in. It's the freelance world is something that I've been tracking personally, with my, with my work at our crowd, something we've made investment in Honeybook, which is a company helping out freelancers, which is, this is a huge market, and it's a trend that's growing in that direction. If you look at any stats, and Honeybook does provide, like, they provide a basically back office for freelancers. So this is something we're looking at like crazy. And I think freelancers are incredibly underserved, and they just their needs are very different than other companies and other individuals. So it's really cool to have banks and fintechs focusing on that as well. And it definitely plugs into the whole niche model of fintech, and that as the technological barriers are dropping, and the regulatory barriers, just because you can do banking as a service, or there's just an easier ability to build these fintechs. It's definitely helping the niche players as well, for sure.
I think one of the things we'll have to look at in the future is if these niche players, based on maybe pressure from their investors, expand beyond sort of their original mandates and expand into like the rebundling and start to look like everybody else. I think one of the I guess the dark underbelly of like a lot of the banking as a service stuff is everybody's using the same tools. Like eventually a lot of banking products will still look the same feature wise. So these niche players that have figured out like there's a specific pain point in a specific industry or a specific user, I think it'll be interesting to see longer term if they can stay focused on servicing that person, if there's a big enough business there.
Yeah, I would assume that that's going to happen. You're going to have companies start either buying or partnering or coming together. It just has to happen at a certain point, or else you're just going to have an incredibly fragmented market, just like what you're saying. And it'll be interesting how it shakes out from the investor side with all these, huge fintechs raising tons of money and having
fragmented and cookie cutter. I mean, that's what's we're talking
both.
about.
Yeah, it's but like the same pipes, but different.
Yeah.
It's like
Just a little bit
like
different.
yeah, it's like you want to hear this metaphor? It's like aspen trees that like share like a common root system. Like that's a good one. Where these trees are like 100, 200 couple whatever far away they are from each other, but they're really
one organism.
It's one organism. So I want to invest in I want to invest in the root system. That's, which is something again we've been talking about a lot. But yeah, we're as crazy as it sounds. As it's weird when you're talking about people raising hundreds of millions of dollars to say we're still early. But I do think we're still early in this whole, area of fintech with providing, very specific services to niche players.
Customer expectations have changed. People are looking to their financial institutions to provide them with experiences that fit their lifestyles. That doesn't mean just dumping data on them. It means providing proactive, personalized, and predictive advice. That's where Money App with Pulse comes in. Developed by MX, the Personal Finance Manager makes it possible to engage customers on every level, from professional budgeters to people who try to avoid personal finance entirely. This can lead to a 60% increase in logins and a 28% increase in NPS. See the MX platform in action. Ask for a demo at MX, that's the letters M and X.com.
Yeah, and so so we had a couple launches this week since our last episode. Obviously, we had Apple Card, and I think we've spoken about that on previous episodes. I don't think we're going to do a whole lot.
Did we? Did I speak about that?
I think Apple's coming out with a credit card. Goldman's involved somehow. Well, what's interesting is the news that came out this week, at least on Apple Card, was, and I guess we expected this from the beginning, but it was clear from the beginning that Apple expected its banking partner to approve most of the applications, right? These are iPhone users. Apple wants to make this card widely available to everybody. So Goldman is approving subprime customers at this point. Don't know how that will play out longer term, but I think that's pretty interesting from a product point of view.
Yeah, it's definitely interesting. We'll see. It's gonna be interesting how it shakes out with this whole thing. You know how much if I get started, it's gonna be bad. So
another launch this week, we had Zerocard, or last week, or since the last episode, I should be more specific. Zerocard was up in waiting list for a few months. One of the challenges we found, like millennials typically hold debit cards and like using debit cards and don't typically like credit cards. But the problem with debit cards is you don't normally accrue loyalty points or cash back. So Zero has I would say a novel way of being able to solve for that. So essentially when you apply for the card, you get both a checking account and a credit account. You put money into a checking account. That is essentially acts as the roof on your spending. And then you use the credit card to be able to spend, and immediately the money from your checking account goes to cover your spending. So you're not actually going into debt, really, or maybe going into debt just, for a few seconds. And you start to accrue points. Cool idea. I had a lot of people signed up, I think 100,000 on the waiting list. I don't know if it's differentiated enough between a lot of these other cards that are out there as well, but it's kind of like a novel solution for a problem that we're pretty familiar with as consumers.
Yeah, I remember a couple years ago, when I was working at Tearsheet, we interviewed a company that was doing for e-commerce, basically. Like they were working with credit cards and rewards, and it was after Durbin, and the big thing that they were discussing also is their dream was to eventually provide rewards to debit card holders. That was like part of it, and it's something that's just like, it's pretty simple, and it's a trend that's happening just because of the fact that millennials, like you're saying, like millennials are holding debit cards. So it's just, this is a big trend that's happening. Whether or not individual players are going to be successful and how they can be successful is going to be interesting. But it's definitely a big trend that I've been, for a couple years, I know we've been seeing, this whole trying to provide some sort of different reward system to either credit card users or, now more importantly, debit card users, because debit card users just didn't have it necessarily in the past.
That's interesting. I think also from some of our conversations, the podcasts that we've done previously on Tearsheet and off, a lot of fintechs have launched debit cards because they're relatively easy to launch given sort of the infrastructure that you described before. But there are definitely companies working on credit card as a service products as well. And we'll start to see those roll out, I think, probably by the end of this year. Another story we had, I know, Josh, this is your favorite story, has to do with the color of cards.
Oh, damn
cards. Josh is really, really keen on this idea that, coloring on a metal card is a differentiator. So Revolut, Challenger Bank in the UK, on their business account, they had a metal card. It was a black metal card. They launched 4 new colors this week. Gold, rose gold, silver, and space gray. Cards look pretty cool, though.
I just thought of, first of all, yeah, I can't even talk. That this is freaking news. Like, oh my god, color of credit. Oh my god.
Again, like,
can I just? Can I put my conspiracy hat on for a second?
Sure.
Which I know I'll take it from you because I know you're the keeper of the conspiracy hat. But I vaguely remember that Revolut was ripping a little bit on Apple, that they were
the card
their
design,
card stealing.
Yeah.
Rose gold is an iPhone color, if I'm not mistaken.
Hmm.
So is this sort of like the middle finger back to Apple? Like, oh,
Wow.
we're going to steal all your iPhones? How
I
about
have to
that?
admit, I did not see that perspective.
How about
Wow.
that?
Wow.
I love that. If
And
that is, then
the roosters come home to roost. The chickens.
if that
Yeah.
if that is the reason, then I am so happy.
Wow.
But if it's not, then if that's the only reason, if that's the newsworthy part, is like, hey, you know, new new color on the credit card. Oh my god, don't. Oh, I didn't even go on Twitter just to see like people talking about how much they love the fact that they're going to order 7 credit cards because they want every color in the rainbow of their iPhone. It'd be great also if they asked you to provide your picture of your iPhone and then they could match the color to it.
Is this true? I
That'd be
also read
terrific.
about the Apple Card that the card changes colors depending upon what you're spending it on. Have you seen that?
I think that's a mootering you're thinking of, Zach. Not sure if
No,
that's a.
I'm pretty sure the card. So my only point there is that I think the physical aspect, the manifestation of a credit card, though it didn't matter for many years, is a differentiator in today's market, whether you like it or not. And there's some technology built into it, and I think whether it's more representative of my personality and the colors I like, or have a cool picture on it, or whatever it is. It is a way these companies are competing, a way they stand out from one another.
So in all seriousness, it's just something that I hate. I hate that. I know it's important. I know, and it is sort of like social media, which I like am really bad. I'm just really bad at social media because like I just can't deal with it. My intern this summer had Instagram and I don't have Instagram, and she's like trying to get me to go on Instagram the entire summer, and I'm like, I just don't want to. I have enough stuff in my life that I have to deal with that I don't want to have to deal with an Instagram account. And like at the same time, that's why I probably shouldn't be head of product somewhere. You know what I mean? Like, because I
no sensitivity to the end user, Josh.
But you know what I mean? Like, I understand it's important, but like, I can't deal. I just can't deal with it.
So by the way, the Apple Card, I just checking it while you were talking, Josh. So I actually wasn't paying attention.
Thanks for listening, by the way.
Yeah, exactly.
Appreciate
the color of the card does change. The gradient changes on your spending habits.
That's crazy. That's okay. That's cool.
That actually is really cool.
That's cool.
Because there's some feedback loop there.
Can it turn to like DEFCON red if you're over your limit?
Yes.
That's amazing.
Yeah,
that's really cool. Okay,
but part of the categorization is based on those colors too. So if you buy food and drinks, it turns orange. You buy services, it's purple. I assume there's some DEFCON red as well. If like,
can you what? Can I Instagram the current status of my like check-in location, the current color of my card? Yeah. So they know everything about me.
All right. You don't like the card story. All right, we're moving on.
I love the card story. It just drives me crazy. But listen, like if Revolut can, like who cares about assets under management? Who cares about, churn? Who cares about the monthly active users? They have a rose gold colored credit card. Amazing. Hell yeah. Let's do it.
All right. We have Starling Bank, UK bank. A little bit different than some of its competitors. Definitely focused on a pan-European expansion, not necessarily like global reach. Ann Bowden was in the news, the founder this week, talking about the bank and says that she's nearing profitability. They're getting closer to $1 billion in deposits. And by closer to 1 billion, it's 600 million. Yeah, it's 600 million pounds.
We're 6% of the way there. We're like getting close.
Well, if you round up, it's $1 billion. So, but and she said and this has been reiterated by a few of the challenger banks that obviously they're spending a lot of money on acquisition right now, a lot of money on marketing. That if they turn that down and turn that off, they could get to profitability. Chris Britt at Chime said that as well this week in the Wall Street Journal. That's kind of a weird thing to say, right? Like, because they need to keep spending on marketing to be able to grow. If they turn marketing off, I don't know what their organic growth would be for any of these companies. So, they may be able to get to profitability, but they're like kind of dead in the water. But anyway, interesting to see that there's talk about profitability in the industry, and that doesn't seem so elusive per se.
Yeah. Okay. I got to calm down first from that whole me losing my mind. But it reminds me. Yeah, exactly. It reminds me of the Netflix and Blockbuster fight that they had. It's from back in the day when they both were just like giving away free stuff just to just to gain customers. And like Blockbuster knew that like if they stopped giving away free stuff, that they're going to churn everybody out. So there's sort of like a fear, I think, that if they decide to ramp down the marketing spend, are they just going to bleed users? I think that's something that could be a real concern. At the same time, I think there's when looking at fintechs, and especially these like digital banking or any type of banking, trying to get B2C, players, it's always a question of when to make that strategic move to optimize. It's a really tough question. And you've looked at like all the N26s and the Revoluts of the world and all the digital banks and challengers, and the real metrics that they've been looking at is acquisition. Like that's all they've been raising based on acquisition, period. Like we joke around like, oh, we want to see all these other numbers, and like going back, that's why the credit cards are important. The colors of the credit card are important because it's all about acquisition at this point. It's not about, they're just trying to get as many people as possible. And so when does it become at what, and these are companies that have raised at multi-billion-dollar valuations, they're still talking about acquisition, which is crazy. So the question is, I don't know when they're going to turn over to talk about profitability. Honestly, they're saying they could. I could do a lot of different things. Every bank could, Amazon could.
Yeah, but do they ever have to get to that? If as long as they're private and they can continuously access capital markets, the story is today all about growth. I mean, like, I think if they were to go public and they had shareholders, public shareholders that they had to respond to on a quarterly basis, we see that happening. All the public lenders, the OnDecks, the Green Skies, they're all getting slaughtered because they just growth slowed down and profitability was elusive, and they're just getting creamed. Like I think Green Sky this week said it's putting itself up for sale, and that was one of the darling fintech lenders.
Yeah, I agree. You can't go public without optimizing, or you can try and see, I mean, you sort of see what's going on with Uber right now. That's sort of like a nice example, and and all these other companies that decide they're still dealing with growth. But like at a certain point, the private money is going to dry up, and then like there's places to go to like alternative theoretically, but like, something that we've been tracking for a while is something like the LTSE, the long-term stock exchange, which Andreessen is backing and which Eric Ries is working on.
It's your favorite
working on my favorite thing. Still waiting for that, for
T-shirt?
that response about that article, that we were going to write. But when it first came out, like 5 years ago,
15, right?
Something like that. Yeah, but no, it's something. It's because I think it's cool. I think it's really cool because the moving away from quarterly earnings to annual earnings, but and all that stuff. But at the same time, like you go to something like that, there's still gonna, even though it's like not necessarily you're going to see the fluctuations in terms of the quarter. There's metrics in terms of you want this company to become a company and not just to become this growth machine. So I think it's a real concern that, and even more so, like I said before, if the market starts drying up, if there starts all of a sudden you start getting rumors that like, well, these valuations are a little too high, and everyone needs to take a breath here and step back, and then you have a problem.
And you have down rounds. It's going to be really ugly.
I would imagine, especially, and then they try to optimize. Next thing you know, they're just hemorrhaging users, which is
and I can't imagine the big banks really have an appetite to buy these guys at high valuations.
They and why would they want to? Like even at a low valuation, why would they want to buy? Like that was, again, going back to a previous podcast. Like I don't think a bank is necessarily the target acquirer. Like I don't even like. It's going to be really interesting, but I think that they're going to have a problem if they really try to optimize, just because unless they've been building to be optimized from day one, which I don't think many have, or at
hard
least
to fix the airplane while it's flying.
Yeah, it's totally fine. Yeah. Build the basement when you have a 50-story building,
So one last thing I want to cover before we call this episode a wrap. Fox got into the fintech business. Not a huge story, but I thought something, I think Josh and I both found it sort of surprising. We didn't expect something like this. But Fox acquired an online lending marketplace called Credible for about $400 million. Interesting. Like, where did this come from?
Yeah. First of all, beginning with Australia, ending with Australia, with
bookends,
with Mr. Murdoch. But I was like, whoa! Like you mentioned that, like you looked at it and then you like sort of like that cartoon double take.
Yeah, I rubbed my eyes, cleared my glasses. Wasn't sure that was it the same Fox that I was thinking of, and it was.
Yeah, and this is really cool. We didn't think about these large media companies that, hey, maybe they become a challenger when we had our sleepers. Is maybe Fox is a sleeper, and they have a lot of money, and they could buy a challenger bank probably
Mm-hmm.
pretty easily, if I can imagine.
So I don't know if they get into a challenger bank. I feel like a mortgage market, lending marketplace fits into sort of some of their other media properties more so than maybe owning the bank at the end of the day.
No, yeah, for sure.
Yeah.
They have so. I'm saying they could get.
They can do whatever
like,
they want.
where could they go? Yeah, they have
Yeah.
such reach. Like it's like the level of reach that they have in terms of access and so much data that they have and so many relationships that they have that they could leverage all over the world and so many
Right.
different
There should be like a lead gen
subsidiaries.
machine, right?
Yeah, it's crazy.
Everything will start to look like AOL again.
Yeah, basically. Like I can't imagine what their corporate structure looks like. It's probably like pages.
Well, one thing that's interesting is so Fox has spun off 21st Century Fox, which I think held a lot of the media assets, the movie rights and stuff like that. So I think they have a lot of cash, and I think as a pure media business, like they're trying to figure out what to do with it. And it's very interesting that they came into fintech.
Yeah, it's very interesting, and they, maybe that ties into them. I know they spun, like you said, they spun off Fox, but there is this whole moving away from sort of fintech. There is this sort of after Disney's coming out with their competitor Netflix, maybe Fox comes out with their own, and then maybe you have a sort of fintech tying to there. I don't know, but there's just so you could go in so many different directions because of the amount of just stuff that they have under their hood or relationships with.
Right.
So I think it's just. It opened my eyes to like, wow, like there could be some like who else could start getting into this theoretically.
I guess we'll keep our eyes open for more investment and acquisition activity. Josh, thanks for bumming around with me again this episode.
losing my mind for about 10 minutes in the middle there, but yeah, it's always fun to chat and hang out, and especially I get to hear the piano at the end. That's what always makes me happy, and nice end to my day. Always.
That is the nice part of the ending the episode. And curious to know what color your Apple Card is today, Josh.
It is serene, whatever color serene is. Just use your imagination.
All right, guys. Thanks for joining us again.
See ya.